welcome to the Home Buyers Seminar being put on this morning by your crew of all things home. That's me, Regina Lockwood of Ferrari-Lund Real Estate, Doug Kaller of Academy Mortgage, and we have some very special guests here to educate us about home buyer grants. First of all, we've got Diane Arvizo of Nevada Rural Housing Authority, and she brought with her Victoria Blanford, also of the Housing Authority. Good morning, ladies.
Good morning, Regina and Doug. Thank you for having us.
Oh, we're so excited that you're here. We've got a great studio audience, too. Give a hand to the crowd here in the room that came out on a Saturday morning to learn about...
Gorgeous crowd.
Yes, to learn how to get free money from the Nevada Rural Housing Authority, but more importantly, to learn how to become homeowners, which is the goal of all these programs and the state entities. But we would be remiss if we didn't begin with a big announcement here. Diane, I hear that you have a new accolade.
Yes, that's right, Regina. We are so honored and pleased to share that we just won a Single Family Housing Excellence Award. It's a national award from the National Association of Local Housing Finance Agencies. We will be traveling to Dallas this next week to receive our award and celebrate with all of our partners across the nation, and we are very excited to be honored with that prestigious award.
Well, congratulations, and that means undoubtedly that you do an awesome job of helping people get into single-family housing.
We certainly have a reputation at Nevada Rural Housing as being pioneers in the industry, no doubt.
That's terrific. That's really terrific. We're very impressed, and we know that you do a great job because we work with them, right, Doug?
We work with them all the time, and just within the last couple of weeks, we've had home buyers getting grants that have been over $12,000, over $11,000, $6,000. It's just amazing. All these people would not be homeowners today without the help of Diane and
the Nevada Rural Housing Authority.
Nevada Rural Housing Authority. They just do a fabulous, fabulous job for our clients.
And let me ask those of you in our audience today, has anybody ever walked up and handed you $6,000, $9,000, $12,000 and said you don't have to pay it back? No, yeah.
Nobody's given it to me.
We got to fix that, Doug.
At least not with an eyebrow raised, thinking that this cannot be true.
True, exactly, exactly. Okay, and to get to the specifics, they get the money. We don't give them to them. You give it to them. They get the money through the Home at Last program. And did you want to begin today by kind of giving us an overview of the program?
I would love to, Regina. That's a great way to start, just with a little background about both Nevada Rural Housing and Home at Last. And Victoria, feel free to chime in here anytime because I know you like to talk.
But Nevada, quiet.
I know, right? That's because I'm in the room, and so she's just being sweet. But anyway, she'll show her true colors here in a minute, I'm sure. Okay. But let me tell you first that Nevada Rural Housing was created in 1973 by the Nevada legislature. For the first couple of decades, our focus was pretty much serving what's popularly known as the Section 8 program. Right. That's what we did. That's what we were known for. But in 2006, under our current executive director's leadership and awesome vision, we launched the Home at Last program. That is the program you know today, but it has evolved and brought in new innovative programs. Almost every year we're doing something new and exciting. And the Home at Last program right now is offering this down payment assistance program, which we've actually had in place since 2012 under the current model that it is today. But last year in 2015, we just exploded what used to be a 4% grant into this buffet of options, which we'll talk about in a little bit. And then in addition to the down payment assistance programs, we offer a mortgage tax credit program, which a lot of people hear mortgage and tax, and they're like, ooh.
They get the heebie-jeebies.
They hear credit, and they're, they get a little interested there. But the reality is that mortgage tax credit is the key that helps you have affordable home ownership for the next 30 years of your mortgage. And we're going to talk about why that's such an important and valuable piece to home ownership.
Okay. Well, you guys, when I talk to my friends from out of state and everything, they can't believe that we have a program in this state that gives them money. And we are just truly honored and privileged here in Nevada to have an executive director who put in place all these programs. And we want to now get into the specifics a little bit about how these guests in our audience today or anybody listening on the radio might get a piece of the action, so to speak. So who wants to begin telling them the first step?
Ooh, that would be Victoria's specialty, and she's kicking me under the table begging to speak.
I'm serving it up for her. Go ahead, Victoria. What would I do if I was thinking this was a year I wanted to get into a new home? Help me.
Well, we actually hold several homebuyer seminars similar to this one almost every single weekend, which is really exciting.
You do it on
well, not on the radio. We have it's more of a seminar format where they come in and we have different partners present on really the homeownership process, because that's key. If you don't understand the process, you're not really going to be ready to buy a home. And so they come to these seminars, and first step is getting in touch with a lender like Doug.
Doug Kaller, Academy Mortgage.
Absolutely, who can get you qualified, because they do all the fancy behind-the-scene paperwork to make sure that you meet those guidelines that we have in place to be able to get that grant.
Right. They work the numbers, make sure your credit score is adequate, make sure your income is sufficient to pay a house payment, et cetera, et cetera.
Mm-hmm.
Okay.
So the other thing, a lot of the people who do come to us, they have issues, particularly credit, or they've had a bankruptcy or a foreclosure in the past and so on. And when we meet with them and review their needs, their goals, and so on, and we work with them to try to help them overcome these issues that they feel are preventing them from realizing this dream of owning their own home.
Absolutely. And so the point of that is that it may not be that you can walk into the lender's office and be pre-qualified in that appointment. They may tell you to do some things like pay down some debt, go dispute a issue, or maybe not dispute's the word, but go fix an issue on your credit. So I guess what I'd like to say is don't get into a situation where your lease is expiring in 3 weeks and you want to go buy a house. You've got to actually start planning 3 to 4 months before you want to actually be in the new home.
Right. The other thing is, if you're dreaming of owning your own home, don't give up. We can help you.
Yes.
There's, not only do we have the money to help with your down payment and so on, but we can help you prepare yourself so that you will qualify.
Absolutely.
Well, and that's a really good point, Doug, and I just want to point out, as when we go back here to Victoria in a minute, that one of the key pieces that you alluded to is that education is now such a critical cornerstone to the steps into the homeownership process. And why we are having these types of venues and homebuyer seminars so often is because homebuyers are ready to get back, or I should say prospective homebuyers are getting ready to consider that step now. Maybe they were a homeowner back, 10 years ago, and they're just now ready to venture back into the scary world, or what appears to them as a scary world of homeownership. Right. And what Nevada Rural Housing focuses on is making sure that we are providing you with the education so that you are knowledgeable and understanding of what is available to you, what is basically best for you, and what does sustainable homeownership really mean in the long run. Getting into the home is the first celebration, but it's that long-term homeownership
being
that you
able
can
to
really
afford
celebrate.
It, right. Being
Yes.
able to keep making those payments,
Yep.
so a short sale or foreclosure does not happen again.
Right, right. And so we focus a lot on that, which is why we're here in this type of venue today, and why we are such advocates for being educated as new home buyers. And so that kind of sets the stage for what we do in the different venues. So I'm going to let you finish what you were saying, Victoria.
Tell us about the education, Victoria.
Well, we have these seminars, and of course, we have a lending partner, a realtor partner that goes over that process, and then we focus on our program, and we point out the different benefits, first and foremost being that the down payment assistance is not just for first-time home buyers. It's a very common misconception.
Right.
First-time or repeat. Mortgage tax credit is for first-time home buyers, but you're actually considered a first-time home buyer by the IRS if you haven't owned a home in 3 years.
And I can't tell you how many people don't know that.
That's key. And
if you haven't had tax credit, a mortgage tax credit on your income tax return for 3 years, you could be 80 years old and still considered a first-time home buyer. Okay.
That's true, and I've actually worked in the foreclosure business, and so coming to this side, it's really nice to see those individuals who, had lost a home, and now they're able, this was 3 or 4 years ago, now they're able to come into home ownership. And so during these seminars, we focus on that, and then we also focus on the education piece. We give out certificates, because you do have to have a homebuyer education certificate to use our programs. And again, it's to incentivize responsible home ownership.
Because in that homebuyer education course, you go over things like how to manage your bills, how to balance checking accounts, how to figure out how much you should be spending on certain aspects of your budget, et cetera.
Correct, yeah, and we're actually developing a new online course, and all these courses we offer are 100% free, again, to incentivize that affordable piece. That's key. We don't want to charge people to learn about responsible home ownership.
Right. And the nice thing we like to brag about coming today is you guys will all get that home buyer's education certificate. So not only are you getting to participate in our home buyer's seminar on the air, but you're also getting credit for attending the class. So we love it that you guys brought those certificates. Thank you very much for doing that.
We're excited to do that, Regina. Thanks for pointing that out.
It's just a nice little benefit. So incentivize is a word that Victoria uses. I use that word a lot in my life too. So okay, so I've gone to my home buyers class. I've worked with Doug, and I've gotten pre-qualified, and I've figured out a number of what I can afford for a house. Then how do we go about accessing the grants? Who wants to pick it up from there?
I think that would be Doug.
Well, after, actually before we get there, you're going to find a house and you're going to go
with a realtor. Well,
with a great realtor, such as Regina, and you're going to, when we meet with you, we're going to go over your income and your tax returns and your credit, analyze what your situation is, and figure out just what you can afford. And with all mortgages, whether it's with the housing authority programs or a non-housing authority mortgage, you have what we call debt-to-income ratios. So what we're doing is we're looking at your income, we're looking at your long-term debt. Your long-term debt includes any automobile loans, installment loans, the minimum payment on your credit cards, and the biggie for so many young people are student loans. But we add all these up, add in what your total housing payment would be, which would be the principal and interest on your loan. You have, obviously, property taxes, which are calculated into that. You have your homeowner's insurance. If the home is in one of the more recent subdivisions, you're probably going to have HOA fees. And if you're by some sort of a water or floodplain, you might have flood insurance. That's all part of your housing.
The payment, they wrap it all up together.
Right, your housing payment. So we add all those payments together. We look at your total income, and when we say total income, we're talking about pre-tax, your gross income. And with these, with Home at Last, your housing, or not your housing, your total debt can add up to 45% of what that gross income is. And that, that's very, very generous. Hopefully you don't have a lot of long-term debt, and with little long-term debt, we can get you into a very, very nice home.
Absolutely. That means don't, before you want to buy a house, go out and buy a motorcycle. That was a big one that came up here recently,
right.
Or a brand new car, or those kind of things. We like to say, wait till after you've gotten the house and closed on the house, and then you can shop for a new vehicle, but not when we're trying to get you qualified. So.
Right. The one other thing is, as far as with your accounts, don't go paying off things without talking to your lender. Certainly don't go making any new charges. And, we can we can go over your credit report and look at all these things and guide you as to what you need to do, how we can increase your buying power, how we can build up your credit score, and just make it so that you're really in the best position to realize your dream.
Right. So Diane or Victoria, after somebody's done that and they've been pronounced grant eligible, we have a number for what they qualify for a house, what can they use this money for? Are there restrictions on it?
Well, that's a great question, Regina. Before I answer that question, though, I just want to point out, Doug just shared kind of a big bite of information that shows just how valuable working with a knowledgeable lender is. Nevada Rural Housing's Home at Last program does require that you work with a certified Home at Last partner, and both realtors aren't required, but we do certify realtors for their knowledge and expertise. But our lenders do have to have an agreement with Home at Last. Doug is an expert in the field, and
absolutely.
Doug and Academy Mortgage, as you can tell, is going to be able to sit down with you and really show you what is the best option for you and why, and whether you qualify for these programs or not. And he's going to take you through that hand-holding process, and it's critical that you work with someone that you can have that good working relationship with. And I just want to point that out because Doug is a very valuable member of the team for
absolutely.
a very good reason.
And he's very thorough, and all the loans and transactions I do with him all close with a minimum of drama.
Yeah, he's a superstar, is like what we like to call him. But I will say that the grant can be used to cover not only down payment and closing costs. And I'm glad that you brought that up because one of the program offerings that we have is a 5% grant that can be paired with an FHA or a VA loan. And that 5% grant is perfect for an FHA loan where you have the 3.5% down payment requirement. Plus, you get an extra 1.5% of grant to help with your closing costs. So really, your down payment is fully covered, and then you got a little extra to help you with closing costs. That'll help you get in that door and be able to have those reserve funds there to help you get into your home, and you won't have to deplete your savings account just to get in the door.
So it can be used for both is the answer,
That's
or
right.
a combination
yes,
of. Absolutely.
Mm-hmm.
Yeah.
An important point with that is that a lot of the agents that are out there. I've had the situation where, we're working with a client together and the client is getting the grant. And the agent thinks that the grant is going to cover everything, that this person is going to be able to buy this home with absolutely no money out
of their pocket.
Not a penny out of their pocket. And they get so upset that the people have to, come up with some money to actually buy the home. Now, there are exceptions to that. If somebody's buying a home with a VA loan, the VA loans are 100% if you're a qualified veteran. The other loan that you can do 100% on is the USDA loan, which is also 100%, but the home has to be approved for that. And the only place, for example, in Washoe County where you're going to find a USDA acceptable home is out in Cold Springs. But if you're buying in Fernley or in Dayton or Minden or Gardnerville, chances are very good that you'll be able to get a USDA loan there, do the 100%. The one thing that I do want to caution you about USDA, though, is that they have very hard restrictions on your housing percentage of your debt to income, where with FHA or conventional, you can actually have a housing payment. We've gotten approvals on those where people's housing payment was literally 44% or more of their gross income. With USDA, they have a number of 29%.
Ooh, that's
and
low.
That's low. So your buying power is greatly reduced, but you don't have to come in with any money. And with that, we can get approvals from them with a housing allowance up to about 33%, even though they say 29. But it's much less than what it is for conventional or.
So in general, what we're saying is, without getting too in the weeds about the numbers, is that although there are exceptions, when you're going to purchase a home, you should be prepared that at the end they're going to have to bring in a little bit of cash.
Right.
Okay, so that means that you want to start thinking about saving some money. And now it doesn't have to be that much money. It can be relatively modest cash to close is what we call that term. What is my cash to close? And there is the added sort of benefit that you actually live in the house for a month before a payment is due. So when you make a payment at the closing, you probably don't have another housing payment for 35, 45 days. So, there are ways to make that pain spread out. But don't think that you're going to purchase a home without investing a penny in the process.
Exactly.
Okay.
Yeah, and another good point that Doug kind of touched on there is that our programs have certain guidelines to get in. Doug mentioned the 45% debt to income ratio.
Right.
But you also have to meet the guidelines for the type of loan product that you're getting. And we actually pair our grant program with 4 different loan types. The ever popular FHA loan. So they'll have their guidelines.
3.5% down payment.
Right. And then the VA loan, which is 100% financing if you're eligible for that.
0 down, right.
The USDA loan will have, as Doug just mentioned, some stricter guidelines for the target borrower that they are serving. And then we also have a unique product that is just spreading like wildfire, and that's our Housing Finance Agency exclusive conventional product offered by Fannie Mae. That is a loan program that you can only get through Nevada Rural Housing, and then if you're buying in the city limits of Reno with our partner agency, Nevada Housing Division. You can only get that through one of our agencies. And that is something that Doug will explore with you to see if that is a good option for you. And I'll just highlight one of the benefits of that is the significantly reduced mortgage insurance that is not going to stick with the life of the loan. You can actually drop that when you get your equity down. So there's all kinds of loan programs, but you do have to meet those requirements in order to then pair it with our program.
And one of the benefits, I believe, of that conventional product you're talking about is a reduced down payment amount.
Well, it does go up to 97% financing on the conventional, yes.
Which means 3% down.
Yes,
okay.
3% down. And then it does have no upfront mortgage insurance, which is another nice piece, which Doug he's the expert on that, so I don't want to take the Doug show away from you. So I'll let Doug elaborate on that a little bit. But it is important to know that you have to meet the guidelines for the type of loan program that you're getting.
But the bigger thing on that is that we help you meet the guidelines, and we are the experts, and particularly Doug, on what piece of the pie is best for you. Okay, which loan and which type and which program is going to be the best for your particular scenario. Because everybody's situation is different, whether they've had a credit ding or a short sale or somebody that makes money on self-employment income. All kinds of scenarios can be presented that make it so your circumstances are unique, and that's what we help you figure out. What's the best program for you? So, okay, real quick, there's got to be a few more things that you want to get out for the home buyers that get the certificate. So what would you like to make sure that these audience members know today?
One thing that I do want to point out, Doug touched on veterans, is that Nevada Rural Housing Authority is a huge supporter of veterans and obviously their contributions. And so one key thing that we offer, specific to the mortgage tax credit, it is 100% free for veterans. So there's a $9.95 flat rate fee to use the mortgage tax credit, but that is waived for veterans. So it's 100% free.
So $995 that other people would pay, the veteran does not pay.
Correct.
Okay. Actually, no. Nevada Rural Housing eliminated the fee. Nobody pays that fee.
Oh,
Isn't that rock awesome?
That is awesome, yeah. I don't even think Doug knew that.
That's brand new. You didn't tell me that.
The fee was eliminated by both Nevada Rural Housing and Nevada Housing Division back on October 1st. No fees for qualified veterans or active duty military.
For veterans,
Just for veterans, right. Yes,
Veterans
right.
Qualified veterans, active duty, and National
average
Guard.
person would pay it, but the veteran doesn't.
Yes, sorry.
That's
correct. $9.95 for Jane and John Doe. Mm-hmm.
Right.
All right. So what else?
So it's free for veterans, and then also that new homebuyer requirement, first-time homebuyer requirement is waived as well. So if you're a qualified veteran, you do not necessarily have to be a first-time homebuyer. That is waived for veterans.
Okay, so the veterans were really taking it seriously when Governor Sandoval said he wanted to make this the most veteran-friendly state for buying homes. So,
yes, and that's part of our goal and our mission, too. In addition to promoting, providing, and financing affordable housing opportunities, we also support the governor's initiatives and everything that he strives to have happen here in Nevada. So absolutely.
That's probably a smart thing to do, to be a quasi-state agency there and support the governor's program, right?
We are kind of smart, so yes.
I knew that about you, Diane. I knew that about you, Diane. Okay, so what other thing would you like the audience to know here today?
Well, aside from that, I guess what I would like to talk about is the combination of the two programs. So if you get our down payment assistance grant and you get the MTC, once the
mortgage tax credit.
What's an MTC, Victoria?
The mortgage tax credit, sorry about that. If you combine the two, you'll actually get a $500 rebate check from Nevada Rural Housing Authority as a thank you for using our programs.
There's your refrigerator, guys. $500 rebate check. There you go.
So you can think of it as knocking that $9.95 fee in half.
Okay.
Or if you're a veteran, you just get $500 for that refrigerator. You just
or washer dryer.
Yeah, whatever you need it for. It comes straight from us. It includes a letter that talks about obviously thanking them for using our program, as well as talking about the education incentivizations that we have. So you have to take the basic homebuyer education to get qualified, but we also offer an after the close purchase course online. It's not required, but if you use our programs and you take both courses, you actually get a $25 Home Depot gift card, just to incentivize people to become more educated and be more responsible homeowners.
Plus, here in Washoe County, we are also giving a $50 RC Willey gift card since we have a local RC Willey store. So they actually get 2 gift cards for that.
For doing that. Mm-hmm. So how many of you think that's a good idea to, after you've actually gotten into the home, to go back online or get back in touch and take another course to make sure that all those little questions that came up after you became a homeowner now become answered? Like, do I really have to pay it on the first? What happens if I don't? Do they take my house back if I don't pay it on the first? Or all those kind of things.
And how do I find my water shutoff valve?
Oh, yeah. That's huge. As a realtor, I can tell you that is huge. Or who do I call if something breaks? Well, where's my home warranty phone number? Those kind of things are all important when people get into a home. So, okay. Any other thing that you want to make sure that they know?
I think that covers all the fun perks we have for people, which is also, always important to cover.
Okay, one more thing I want to take before we take a break. I want to talk a little bit about where does this money come from? This is free money and we're giving it away and we're wanting people to get it. Where does it come from?
Well, I can give you we're counting down to the end of this segment, brief recap, or I can elaborate, but I'll give you the brief one right now.
Okay.
The program, the Down Payment Assistance Program, is essentially brought to you without any federal funding whatsoever. This is not a federally funded program, but rather we have a partnership with an investment banking firm who agrees to purchase these loans, and they sell them on the market and in mortgage-backed securities, and that it's a revolving fund of money. So we don't run out of money. There's no limit to how many loans we can do. The lender advances the grant We have a master servicer with U.S. Bank who actually purchases all the loans from our approved lenders, and they will reimburse your lender for the grant that they advance to you. And then U.S. Bank pulls those into mortgage-backed securities, and our investment banking partner purchases them. And so that little circle just keeps going around and
round it goes.
And we just keep getting to deliver our mission to you.
And they make money on the mortgage-backed securities.
Yep, that's where they make their money.
And that provides the funds for the grants.
Our investment banking partners are the uber smart stockbroker type of people that you can envision are going there, and that's how they make their money. So, and that's what they're good at. So we let them make their money so that they can give us the grant money to help you.
And this is such an honor and a privilege to have this opportunity in the state of Nevada, so we really want to make sure everybody takes advantage of it. We're going to spend a little time during the break asking our audience members what questions they specifically want answered, and then we'll be back right after this with another segment of Homebuyer Seminar.
The following message is brought to
And welcome back to the Homebuyer Seminar Down Payment Workshop, a division of Home at Last radio show. With me, Regina Lockwood. I'm a residential realtor with Ferrari-Lund Real Estate, and I just want to give some contact information if I could. If you have any real estate concerns or any interest in buying and selling, I'd love it if you'd reach out to me at 775-843-5133. Or you can always email me at regina@ferrari-lund.com. And what about you, Doug, if they want to get pre-qualified?
I'm Doug Kaller from Academy Mortgage, and you can reach me. My direct line is 775-828-7006. I'd love to talk to you, or you can email me at doug.kaller, that's K-A-L-L-E-R, at academymortgage.com. Academy Mortgage is written out.
Okay, spelled all the way out. All right, and one more number before we'll go make sure they have your contact information, Diane and Victoria, at the end, but I want to give them call-in numbers today in case anybody listening online has a question. You can call us at 844-790-8255, and we would be thrilled to get a call from somebody listening over the radio on 1180 a.m. All right, so we talked a little bit during the break about some of the things the audience was interested in, and you want to take the question that we got about the process. Who wants to handle the order of things that the potential home buyer should proceed in?
Well, if somebody was, if somebody getting qualified, you would come in, you would fill out a complete application. We would look at your income, we would look at your taxes, run your credit score, figure out just what you qualify for. Give you a pre-qualified letter. You would take that to your realtor and go out and start shopping for a home. If you find a home that you're interested in, you can call me, give me the information on that. I can look up what the taxes are, estimate the insurance, if there's homeowner fees and so on, and give you a good idea as to exactly what your payment would be.
What that house is going to cost you every month.
Correct. But when you qualify, and the important thing with the Home at Last program is it really has very easy to meet guidelines. If you make under $95,500 a year.
People make under 95 in the audience? Yeah? Everybody not in the six-figure range?
Okay, so if your income falls below that, that's one thing we can check off. The next thing is that for the various programs, the minimum credit score is 640. And when we talk about credit scores, you have three scores. You have your Experian, Equifax, and TransUnion score. We throw out your high score, we throw out your low, we go by the middle score. Now, if there's more than one person on the loan, today they go by the weaker borrower. So it used to be whoever made more money, that's whose score we used, but today whoever has the poorer score, that's the basis for your qualification.
I see some potential trouble for husbands and wives here if somebody's got a really bad credit score, right? But be aware you're going to have to fess up what your score is or your charging habits have been, right?
Right. And then the other one is that your maximum home price for the program is $400,000. I mean, that's just an amazing amount of money.
$400,000, you can buy a nice house.
You sure can. With FHA, it's going to be, and USDA, it's going to be less because it goes by their guidelines, which are county set. But still, you're able to get into a fabulous home, and so once we figured that out, now if you meet those three criteria, you're going to get the grant.
Yeah, pretty easy. Pretty easy.
And one last thing is that if it's a husband and wife and they, one of them makes a lot of money and has good credit, and between them they would be over the $95,500 limit. We've done lots of loans for people where we just have one borrower on the loan so that they're able to get their assistance grant. And
so they do the loan in the name of the one individual, either the husband or the wife, and then once the house closes, you can simply add the other person's name to the title.
Correct.
Okay. So do you see that we make it work? Do you see we find a way that we strategize to try to get everybody the full benefit of all of this? So, okay, that was awesome. And then I know a question, previously I spoke with an audience member who wondered about, they have a house that they're living in now, and they want to step up to a different house and have the one that they're in at the moment become a rental. It was my understanding that they could get the grant as long as they intended to occupy the house they were purchasing. Is that correct? And can you elaborate on that?
Happy to elaborate on that, Regina. So that's true and false in that some of the loan types that we offer will allow that, and then there are restrictions on other loan types. So, for example, that awesomely unique HFA Fannie Mae conventional program does restrict that you do not own any other property at the time of purchase. So you wouldn't be able to use that program if you owned another property. But if you did own a home and you were going to purchase a new principal residence and live in that home, then you could use some of the other loan types. And Doug would
share with you which ones. But so it means that even though some might not be open to you, again, we try to be big problem solvers here, and we find a product and a way to make sure that you can get the free grant money and still get into the new home, even if you currently own a home. So
yeah, the main requirement is that this is your primary residence. That's the purpose of the program, is to help you into home ownership, not to help you become a real estate tycoon.
Doggone it. Doggone it. So, okay, mortgage tax credit. Let's talk a little bit about that, because that is such an important part of your program, and yet it is very misunderstood. What exactly does a mortgage tax credit do for a borrower?
This is where it gets pretty darn exciting, as I was telling Michael and our audience over here, that the mortgage tax credit is just not very well known across Nevada, and our mission here is to make sure that more people understand how that valuable benefit of a mortgage tax credit helps you for the 30 years of your mortgage. So I would like to delve into this a little bit. And Victoria is going to help me because she's also an expert in the field. She's one of the home loss specialists that goes out and trains people on the value of a mortgage tax credit. But before I turn it over to Victoria, I'll just touch on the fact that the credit is the piece that is so fabulous. When you're filing your taxes, if you have any tax liability to Uncle Sam
next week,
any credit that you can knock off the amount that you owe to Uncle Sam, you're just smiling ear to ear, right? You want as many credits as you possibly can, and there's a very small bucket of credits available to you.
Because I always
most of them don't apply.
Right. I always talk to people about the difference between a deduction and a credit. People think that we're talking about a deduction. Oh, yeah, I can write off my interest, blah, blah, blah. Yeah, you can. But in addition, if you get a bill that says you owe $3,000 to $5,000 to the IRS, and then you get a mortgage tax credit, whatever that credit amount is subtracted from that $3,000 to $5,000 you owe. So that's the difference between a credit and a deduction. So go ahead and tell them a little bit about how they get this mortgage tax credit.
Thanks, Regina. Our average tax credit is $2,000 a year. So as Regina just said, if you owe $3,000 and you have a $2,000 tax credit for your mortgage tax credit program, then you're only paying $1,000. So think about the refund you're going to get, because you've already paid most of that out of your withholdings on your paycheck, right? So you apply your credit and bam, you are getting some money back to make some home improvements. That is a dollar for dollar tax credit that goes right back into your pocket. We have two different credit rates that are assigned to your home purchase. You'll fall in one or the other, but the average is $2,000 a year, or in one particular credit bracket, you can actually get a higher no limit credit. So it's amazing that you can get that credit dollar for dollar, but in addition to that, after you've taken your credit, you also can write off the remaining interest that you didn't get the credit on as an adjustment as an additional deduction. So you can adjust your taxes that way further. So it's a win-win on both sides of that. So, Victoria talked about how we have a flat fee of $995, which is already awesome because it used to be 1% of the loan amount.
Which so 1% if you were buying of $200,000 is, $2,000.
Yeah. But it was still very valuable because you got your first year's refund paid for that. But we actually made it more accessible to more home buyers by reducing that fee to $995. Plus, as Victoria said, we also have that $500 rebate. Well, we'll give you $500 back, so you're only paying $495.
And then
for
you
this
get
program,
Home Depot and RC
just for fun, right? But you get to have this credit every year that you file your taxes, that you live in this home and have this mortgage tax credit. And if you refinance, we'll reissue your certificate so you don't lose it. So you're not stuck in the same loan that you got originally in case the rates get even more awesome. But it's just an amazing program that just pays you every single year. You can pay your loan off early. You can use that money to remodel your kitchen. You can pay for Christmas. You can go on a family vacation.
Right. Anything you want to.
Every year you're getting that credit back. Yeah.
How many of you sound excited about that? They're nodding. Everybody's pretty pleased with that kind of thing. So do you have to have a high-powered accountant who knows what's going on to be able to take advantage of this?
Nope. All the current tax software programs for do-it-yourselfers already ask you if you have one. You mark the box. It walks you through the process. It helps you fill out the form, and it knows how to apply the credit. Easy peasy.
Okay, good.
Well, one thing that's really important about the mortgage tax credit is it can increase your buying power.
Oh, yeah.
Yes.
And what you can do is you can increase your take-home pay with your employer by up to $166.66 a month,
which is $2,000 a year. They just divide it by 12.
$2,000 a year, and if you're with FHA, you're actually able to subtract that $166 from your debt-to-income ratio, which is really cool because with the current rates, that's going to increase your buying power by over $28,000.
So if you qualified for a $200,000 home and you did this, you divided the mortgage tax credit by 12, increased your gross income per month $166,000, all of a sudden you're qualified for a $228,000 home. And as a realtor, taking people out, showing them what's available, I can tell you there's a huge difference in the quality of homes and the number of homes available between 200 and 228. Now, 228 is still a challenging number. The median home prices are going up. But let's say you were at the $300,000 level and then you got another $28,000. That would really increase the options for what you could purchase.
Right. Now, if you're using one of the other loan products, we can't subtract it from your debt to income. In those cases, you're adding it to your income. So you're adding approximately $2,000 a year to your income, but it still will increase your buying power by, around $10,000. So it's still a big deal.
A very big deal.
And, particularly what's so frustrating to me right now is that I'm just seeing more and more people being shut out of home ownership as home prices go up. Their incomes are not appreciating at anywhere near the rate that home prices are, and people who a couple of years ago could have been homeowners, today are just doomed to be renters because they don't make the income necessary to meet the prices of homes today.
Right. I was on the receiving end of a call yesterday from a couple that were qualified for $180,000. Excuse me, $180,000. Now, I will be very happy to work with them, but I'm definitely going to be looking in the vicinity of condos and townhouses and things because $180,000 would not really get you many selection options in the actual single-family home situation.
The other possibility for people in those price ranges are the converted manufactured homes. And Diane and Victoria have a wonderful manufactured home product. And actually, they've got some big news they're going to share with us today as to changes of that program that are happening on Monday.
Okay, he just served you up an entree there. What if I want to buy a manufactured home because I don't qualify for a whole lot else? What can I do?
Well, manufactured homes are a type of property that are very much needed in the areas that we live in rural Nevada. And manufactured housing had been in our program for quite some time. And then with one of our partners, unfortunately nationwide, it was removed from all the housing finance agency programs with U.S. Bank. And we just put our foot down and said, you know what, we live in Nevada.
Right.
There is no way we can serve our home buyers without having a manufactured home property type. So thankfully, our amazing partners at the corporate backside of U.S. Bank, not to take away from you and Academy Mortgage, Doug, but U.S. Bank, the master servicer of this program, did work with us, and because of our excellent reputation and the quality loan making that we're making in Nevada,
right,
they allowed us to bring a manufactured home program back into the program just 3 weeks after they had eliminated it nationwide. So that was tremendous, and that just shows how we are pioneering to serve you. A lot of people don't see that work done in the background, but that's how we help bring these products to you. What Doug is talking about on Monday is that we had been offering that manufactured home only with our government programs, which is the FHA, VA, and USDA. We are excited that as of Monday, we will now be able to offer that manufactured home program with that HFA preferred Fannie Mae conventional loan type. It will be paired exclusively with a 4% grant option. So if you are considering a manufactured home and you want to look at the conventional loan product that we've piqued your curiosity about
because
today.
Because of the lower mortgage interest upfront rates.
Yes,
and
there's some pretty cool stuff.
Yeah.
Doug will be able to sit down with you and share you how he can get you in there with a 4% grant.
I'm impressed because, again, these are problem-solving strategies, that we've figured out a way, you've figured out a way to make it work so that the people can get the program that is the most desirable and still use it with a manufactured home. That's fabulous.
I would like to give Diane some kudos because Diane has fought for these programs like nobody else. And all these great new programs that have come about over the last year or so have all been the result of Diane's hard work behind the scenes. She's the one who has really made it happen, and we're so thankful for
all the options.
The opportunities.
Well, Doug, gee, I can't take all the credit. You're so nice. I'll slip you that 50 later. But the reality is it is a team effort.
Right.
And with the support, the reputation that Nevada Rural Housing has in the industry has helped support and open doors for us to be able to make that change. Our team consists of 7, or actually now 8 team members in addition to myself. Victoria is one of the amazing people out there. We listen to our lender partners, our realtor partners like you, Regina, and our home buyers on telling us what it is they need. And we go back and we brainstorm and we think, how can we better serve and fill that gap to homeownership? What is the obstacle that is keeping people from attaining their dream? If they're excellent renters, they deserve to be a homeowner if they qualify and if they're ready, if they've been paying their rent on time and their utilities on time and they want to buy a home, we're going to try and find a way to make that happen for them.
And sometimes the transitional step is a manufactured home.
Yep.
Absolutely.
So
and I was out touring the new Tesla facility the other day. Thursday, I think we went out on a tour and saw all the massive building that's going on out there and learned what a switch data storage place is. I had no idea I thought they were a call center, for God's sakes. I had no idea what they did. But anyway, they were showing us that they're 12 miles from Silver Springs. The end of the current USA Parkway is 12 miles from Silver Springs. Well, what kind of housing is in Silver Springs?
You got it. Manufactured housing will serve a lot of the people who will be employed by many of these industries and the affiliate companies that will be coming in to support those industries.
Absolutely. That's exactly what I thought. Boy, Silver Springs is they just haven't built a whole lot of housing subdivisions, and you can't build the houses fast enough. They're building Tesla and Switch and all these other places a lot faster than we're building houses. So.
Right. And down that Highway 50 corridor and up 95, we've got Dayton and all the way over to Fernley. That whole area, that region, even out to Fallon and Yerington, those are the communities that a lot of home buyers will be coming into for not only affordability, but for options. And with the new, Tahoe Regional Industrial Center going out there and everything coming that way, it is just going to be a much more desirable place to live and work and raise your family.
And I always make a joke. I tell people if you want a stock tip, which it's not really a stock tip, you want an investment tip, buy in that area. Buy in Dayton, buy in Yerington, buy in Silver Springs. Those are places that are going to go nowhere but up. So that's a good thing. So if you had somebody at a course and you wanted to make sure you got a couple other points in, what would those points be, Victoria? Am I putting you on the spot here?
No, not at all. I think one key thing that we like to point out is our areas of coverage so that people are aware. We are Nevada Rural Housing Authority, and so we cater to populations of 150,000 or below. And so specific to northern Nevada, that really only excludes the city limits of Reno. So all of these areas that you guys are talking about with all the up-and-coming fun stuff, Silver Springs, Yerington, Fernley, all of that is 100% covered. If we're talking about Washoe County, Sparks, Sun Valley, areas of Cold Springs out there, and that's, again, where your lender and realtor are going to come in, and they can check and make sure that your home qualifies. But it is key to find a home in these qualifying areas so you can take advantage of both programs.
You know, it's so true. Can I just touch on, too, that Victoria is absolutely right, that a lot of people think about rural as being just out in the sticks somewhere, and they don't want to live there. So they're like, I want a program where I can get into the city. But first, rural is not rural in the traditional sense in Nevada. Nevada is a rural state, and only the city limits of Reno are what we consider urban, not speaking about down south, of course. And so what we did is we've partnered with Nevada Housing Division, and in 2014, they were able to offer the complimentary down payment assistance program that, like what we're offering previously. And that enables the buyers in Reno to also be served. So we love to partner with our fellow agencies and make sure that we're bringing every program that we can to help you regardless of where you want to live.
So again, nobody is excluded. Your trained lender and your realtor will find a way to solve the problem and get you into the program that's most appropriate for you. So that's right. Patting ourselves on the back here, right?
You know, something that I would like to bring up about this is that the amount of your grant, now the Nevada Rural Housing grants range from 2% up to 5%. As your grant becomes more, your interest rate increases. But if you were to compare their program and figured out what you received as your grant, what your cost was over a period of time, and most people, historically, people only kept their mortgage for typically about 5 years. Today, I think it's probably closer to 10 or even a little bit more because we've had such great housing prices and such great interest rates over the last couple of years, and you'd be foolish to move out of those. But with that said, if we were to compare the Home at Last programs with a non-Nevada rural grant, and you figured out what your costs would be, even if the interest rate was a full percentage point less, you would be ahead with their program for 10 years or more. It would be less expensive to own the house with their program than it would have been had you gotten possibly a lower interest rate without the grant. So it really, in most cases, if you're going to sell the home or refinance the home or whatever, this is the right product for you because the likelihood is that it's going to save you money no matter how long you have that home.
And what I like to try to jump on and tell people about is that you can get the grant for 2 to 5% of the purchase price of the home. And what that means is that if you need more money, if you're starting out this home buying process with less cash in the bank, and so you need a little bit more to cover all the down payment and closing costs or more, cover as much as possible, then you might take a little bit higher of a grant amount, okay, and pay a slightly higher interest rate. But it doesn't really affect you that much because the mortgage is over 30 years. So even if you're paying a slightly higher interest rate, it gives you more cash now. And over 30 years, $20, $30 a month more is not that big a deal if it provided the $5,000, $7,000 extra you needed to consummate the housing transaction.
Right.
Would you all agree with that? Mm-hmm.
And, the issue for most people is not making the payment.
Right. It's coming up with the money at the end.
The issue is coming up with the down payment money because particularly with rents being what they are, and historically we used to figure with rents, when your rent went up, it went up maybe 2% a year, which was $25. Today, your lease comes due, and the landlord is raising your rent $200, $300. And so people are constantly having to move. Their lease runs out, and they've got to find a new home because they can no longer afford to stay there.
And they're not moving up. They're not moving up when they're looking for a more affordable rental. They're moving down in neighborhood, in quality, in size, things like that.
Right. So it's impossible with this situation to save money for the down payment with these programs, we're overcoming that obstacle. And then, of course, the big benefit is these are all 30-year fixed-rate mortgages. Your payment, your taxes are likely going to change over 30 years, and
but not that much,
right? And your homeowner's insurance is going to change a little bit over time, but you know what your payment is. You don't have to think, well, gee, 2 years from now I'm going to have to move because I can no longer afford to live here.
Right. You're going to know forever that your payment is $1,200 or $1,400 or whatever it might be. So as we get to the final couple minutes, anything else that you really feel like we want to be sure we bring out here today?
One thing that I would like to point out, going back to the MTC kind of reinforcing how great it is that there is the $9.95 fee, but it's essentially an investment. So you have to pay this $9.95, but you're getting this benefit, average $2,000 for the life of the loan.
And the grant can cover it.
Exactly. One thing, too, the grant, you can pair them, but it doesn't have to be paired with the grant. One thing that Diane has said that I really like is that it's kind of like adding fries to your order. Mm-hmm. So you can pair it with any type of loan product, but, of course, pairing it with our grant, you get it you can factor that in.
The rebate and the
but what's really cool is so you get this benefit for the life of the loan. Diane mentioned you can refinance. So if you have this benefit, you can refinance and keep it for the life of the loan, and you're looking at an average of $40,000 to $60,000 just for paying this $9.95 fee. So it really is something. So the grant assistance gets you into the home, and then this mortgage tax credit helps you out the entire the rest of the time that you live in that house. So it's really a lifetime benefit.
So as we get to the final minute here, let's have a phone number or two from you ladies. Victoria, if somebody wanted to call you at Nevada Rural Housing, how would they reach you?
Well, I can't say I'm in the office often, but you can always call my cell phone, 775-870-2428. And then we have an email account shared by all of our marketing specialists, Hal, H-A-L, at nvrural.org.
Hal at nvrural.org. Mm-hmm. Okay.
The funny thing about HAL, that's the acronym for Home at Last.
I figured. So I didn't think it was a person.
Yeah, we actually just recently adopted a puppy to help people remember HAL is our puppy that is our little mascot. So HAL at nvrural.org is a great way to get in touch with us.
To remember. Yes. And anybody, you want to give a phone number for you, Diane?
Well, Victoria's always out doing the marketing for our program, so her number is the way to go, 775-870-2428.
Okay, this has been the Home at Last Home Buyer Seminar today. We hope you all have had a good time. Did you guys enjoy? I'm residential realtor Regina Lockwood with Ferrari-Lund with Doug Kaller, and we'll see you next Wednesday at Home at Last.